All right, started the recording here. What time is it? Just want to make sure I don't drag that beginning section too long. I want to give good time for Q&A, but ridiculous. This morning I was looking 54 funded members. Absolutely ridiculous. That is like an achievement that I could have never imagined, especially with how little people we have in the community as a whole. 54 funded, and also just the payouts from funded members has just been ridiculous lately. Like I think Tommy this morning, what is that, 3.5K from FTMO. I know the guys were talking a bunch about payouts the last few days and whatnot. And then also obviously some issues with the firms too, like the denying payouts and stuff like that. U Chef, Pound JPY, AUD Chef. We'll take a look at those. I'm already familiar with a few actually myself. I did take Pound JPY, I believe, somewhat recently. I missed. It was kind of like 3 of them in a chain, or 2 of them maybe. And I took the first one and wasn't present for the other following ones. But yeah, one thing I did want to go over, I have a little bit of notes on it here, is this chart. I just mocked this up pretty quickly before, but the reason I did was to, let me actually, I want to make sure I can look at chat just in case while I go over it. So let's see here. And then I do have some notes that I'll kind of have to peek at, I guess, behind chat as I go. But the reason I kind of made this chart was I wanted to go over like some of the main issues that I find in this specific scenario with students. Now, this would be a whole different chart if we were going over people outside of the community, because I think there is a massive discrepancy just because kind of what we teach here and the foundations of it. For example, analysis is one of those things that people really struggle with outside of this community. I think the advantage is that because everybody here trades the same exact strategy, analysis is one of those things that people pick up on and get used to much quicker, which is really nice, honestly, versus if everybody traded different strategies and whatnot, it would become very difficult and one of the bigger issues on this specific chart here. Tomas mentioned he has some data we can go over. He just hopped in call here. So like I said, we'll go over, like Haroon, the trade you mentioned, Roshan, those trades you mentioned, and then I'll hop over to Tomas's data after I go over this chart a little bit more. But number one being analysis. So one of the main things I just wanted to talk about here was there is a common belief with some that better in more analysis means a better trading edge. And it is something I kind of want to nip in the bud, because obviously you guys are fairly familiar with this and the way we teach here anyways, which is why it's such a small portion of this chart overall. And obviously these numbers are arbitrary. This is just something from my experience. I've been mentoring for about 4 years now, and even more specifically kind of the simple markets community in general. Some of the main issues that I think people lack, and then for every single one I do have a solution as well. I'm not just going to throw issues out there and not give you guys concrete solutions of what I think you can do. But number one is better analysis. Now, this is a lot of the people who, for example, they believe that newer and better concepts and the more that they add to a trading plan means that they will have a better edge over the market. And in some cases, this can be true. And for an example, people who believe in discount or premium or multi-time frame analysis, there's different concepts. Sven was talking about turtle soup last week. There is so many concepts in analysis out there, especially in the smart money space. It is not that these things don't work. I think that the biggest issue is actually piecing them together into a trading plan that can be sustainable is the hardest part, which is honestly a huge advantage, I feel like, of what we do here is we give you that plan right away. And it's literally the reason we are named Simple Markets, is because this outside of our community is probably the biggest issue nowadays with smart money in the trading space, is there's just unlimited concepts. And there is this strong belief, I guess I don't want to name YouTube channels specifically or any creators, but some of the largest creators out there in the smart money space almost lead this idea to believe that if you have more complex analysis and more concepts, you're going to be reading the chart and you can actually read every move on a trading chart. It's just completely false. It's why probability outlook is a huge topic here as well. no matter how hard you try, no matter how many concepts you can think of or add into one huge complex trading plan, whether it's, time sessions and kill zones, discount premium, bank dealers range. Trust me, I've studied all of this stuff too. It is just not the reality that you can read every movement on a chart, especially something like the foreign exchange market, which is such a huge and liquid market. There's governments at play in this market, there's institutions at play, there's private banks and hedge funds at play. It's really not something that's realistic. And I have this as such a small portion because I feel like a lot of you guys here understand this, so I don't want to dive too deep into this. But for those of you that may be in that boat, these are the people who are more susceptible to changing trading plans, because they believe that, if they add more topics to their current plan, if they have a more complex trading plan, they're going to do better, which is just not the reality of it. It's why simple markets is what it is. The simpler you can have your trading plan, the less it allows for these other psychological topics that we have listed here to kind of work their way into your trading. If there is 19 steps to your trading plan before you enter the market, every trade you might start looking there and begin losing confidence in those losing streaks, and maybe asking yourself, well, wait a minute, did I follow step number 17 correctly? Did I follow step number 4 correctly? Also, this general idea of having too many concepts in a plan, like 19 steps, is kind of moving away from the idea that the markets are fundamentally probability. No matter how hard you try, how many concepts you add, and how perfect you think your trading plan is, with that many steps, you are not truly internalizing the underlying probability that the markets truly are. I use the coin flip scenario. I'll maybe touch upon that in probability a little bit more. And then optimization. This kind of goes hand in hand with that huge trading plan I talked about. If you're adding 19 different steps to your trading plan, you are trying too hard to optimize. And, perfectionism is another term I use here. It's kind of a mental state. And you're honestly just hurting yourself in that longer term. This is not something that I feel like a lot of you struggle with. That's why it's a small section here. But my solution that I did write out here was you simply need to backtest enough until you reach profitable results, and then lessen that focus on backtesting and focus on live. So those two go hand in hand. And the reason I say this is if you feel that all of this complex analysis is what you need and better analysis means you're going to be profitable, we encourage you guys here, as you know, do at least 100 trades of backtesting with this trading plan, send it over to a coach, we'll look over it, and there is very, very few scenarios, as many of you know, where someone submits 100 trades of backtesting data with the strategy we use and it's actually genuinely not profitable. This is very, very, you guys see me do data reviews week after week, some people's first ever data reviews, and they're all profitable. I honestly can't tell you if we've ever been submit one that is not profitable. And it truly just kind of enforces that law of large numbers and understanding that over 100 trades, even if your analysis is not top tier, you're not great with liquidity sweeps, you're not great at break of structure, it shows that over that long term, you still do have that profitable edge. And that's why it's so important, those two solutions that I mentioned. Backtest 100 or so trades, see the profitable results. If you are genuinely not profitable after 100 trades, which like I said is uncommon, but if you're not, it just simply means review it by a coach, and the coach will give you some tips and pointers, and then do it again. And then once you reach that point of profitable backtesting results, which a lot of you in this call even might be at that point, lessen your focus on backtesting and then work on a live trading session with a journal. Journal super important as well. And the reason I say this is some people, when they have profitable results, they may fall into this optimization category beyond that. So they might submit, call it a 32% win rate, which is a great win rate when you're using 3RR. They have profitable results and a profitable edge. But then instead of their next question being, okay, let me now shift my main focus to live trading and essentially use the money printer that you've created of the strategy, instead of doing that, they start saying, okay, now instead of 32%, how can I get my win rate to 35? That's a whole other scenario. We're going to touch upon that in this section. But like I said, backtest until profitable, lessen your focus on testing. So, if at first you tested 100 trades and that took you a week, if you're a slow tester, don't sit there and test another 100 trades in the next day and then go for another 100 and another 100. Lessen that backtesting, maybe do a session a week or a session as comfortable as you can do, but mainly focus on live trading and journaling. That's the honest solution for this step here. And the second one I want to talk about is probability outlook. Now, this one is a bit tougher to talk about because I will say it is something that has to truly be internalized. It's very easy. The analysis one, I mentioned backtest, have a coach approve it, and you see profitable data in front of your eyes, which is a concrete, tangible thing you can look at. With probability outlook, this is the tough one because it is not something that's as tangible. It's something you really, like, truly gotta mentally evaluate and hold yourself accountable and say, am I really thinking about this from a probability standpoint? And kind of what I mean by that is a few different things. One of my notes I have here is one-off trade scenarios. Wonder if I can, like, honestly just pull this over so I can switch back and forth. Oh, well, it's gonna go. I mean, this is kind of good enough. You guys can see that at least, and let me pull my Discord up over here. So one thing I do talk about is those one-off trade scenarios. Can I shrink this a little bit, maybe? It's not gonna let me. I want to see if I can, like, shrink it up and all right, that should be fine as long as you guys can still kind of see most of this. But yeah, those one-off trade scenarios, what this kind of means, I don't want to call anybody out in chat, but for example, taking a losing trade and asking if it was valid in hindsight. This is, obviously a question I get a lot from many of you, and it is kind of that underlying idea of probability outlook, is understanding that if analysis is set in stone, you have backtesting profitable results, then you should be able to fundamentally trust and evaluate your own, what I call one-off trade scenarios. And this is an example of where, let's say I pull up USD CAD here. USD CAD, I had 2 winning trades in a row, followed by a losing trade. When I look at this, I simply understand that out of these 3 trades, 3R, -1, there's nothing that I did fundamentally wrong here. And this is a tough part about probability mindset, is some people don't have that ability to really think in that mindset. They see the loss that occurred here, and then they begin asking themselves, well, wait a minute, I don't know if that fair value gap was big enough. There's only one here and here, and they're kind of small compared to this big one here and this big one here. So maybe that was the problem. And they start asking themselves, well, was there really a good sweep on liquidity here? I'm not really sure. And was there a good break of structure? Yeah, break of structure looks good. But it's only when this trade loses that they begin falling into that tunnel vision of, did I do something wrong? And I do think this touches a little bit upon that lack of confidence section that we talk about, or that confidence and edge. Whoop, everything just disappeared. Let me see if I can put my screen back together here for a second. I don't know what just happened. All of my tabs went out. But it does fundamentally come back to that lack of trust in the edge, like I just mentioned. And in general, I don't know if it's why it's not going to let me pull up the chart over it anymore, which is kind of weird. But it's that general idea that those one-off trade scenarios kind of hurt people because they get into that mindset of not understanding, the pan of how wins and losses, the distribution of how wins and losses should pan out in a live market. Discretion missing winners is also another thing, not necessarily in probability outlook. This kind of goes into all sections, but this is a very, very common one. Some of you might even realize this in your own trading, but when you have discretion coming into the charts here after already, like we said, an analysis, backtesting, profitable data, that discretion missing winning trades is honestly where a lot of you may fall as well. That's why this is a much bigger section compared to the other ones we've talked about or shown. And it's because when people get into that live chart, they start looking for A+ setups and they start picking and choosing. And this is also fundamentally just not how probabilities work. I use the coin flip scenario a lot. So if I take a coin and I flip it 10 times, it is likely that I am not going to get 5 heads and 5 tails. Yes, we understand fundamentally that a coin is 50-50, but it doesn't mean that when I flip it 10 times, I will immediately get 5 heads and 5 tails every single time. It is even possible that I get 10 heads and 0 tails over the course of 10 coin flips. Does that mean that I'm flipping that coin wrong, or the air resistance is off, or whatever it may be? Obviously it doesn't, but it's that real understanding of probability and understanding that you could take 5 trades and all 5 of them be losses for no reason at all other than the probability and the distribution. And if this is not like truly internalized by a trader, it is going to be very, very difficult in a live market to execute effectively. Why you took certain trades, this is a big one. So some people will look at mine, Sven, or Andre's journal and ask ourselves, why'd you take that trade or why'd you take this trade? At the end of the day, single trade or one-off trade scenarios, like I mentioned it before, are so incredibly minute to a long-term edge that it should not be something that matters. And I know it's hard to hear for some people, especially when you're in that learning mode. Obviously, a lot of you guys are here to learn. When you have that mindset of wanting to learn and improve, it's very difficult to hear a mentor say, well, that trade really doesn't matter. But it is the truth of the fact where some of you may take a trade and it loses due to spread or slippage, and then you hear a mentor say, well, fuck it, on to the next. As hard as it might be to hear, you got to understand that I've been trading this exact strategy even for years now, and the amount of trades that I've lost due to slippage or spread, or even the amount of money I've lost to swap, it doesn't necessarily matter in that long term with the law of large numbers. And that's really that probability mindset we try to get you guys into, is understanding that these one singular trade scenarios do not matter. I've had trades where I've had 3 correlated pairs and all 3 of them lose at once. And yes, it sucks. I lose -3 RR. I've also had 3 trade scenarios where all 3 of them won and I won 9 RR. So it's that kind of understanding of probability and distribution that is very, very difficult to internalize, but it is the truth behind it. We get a question in chat I want to touch on, but understand that probabilities play out once you're executing the same plan over and over correct. In our plan, we have liquidity sweep. However, I saw some members that would take trades with no liquidity sweep and upset when they lose. Could this have not been avoided long term by simply following the plan with liquidity sweep? So, and this is what I would say the difference is. If someone has backtested data that shows that they don't use a liquidity sweep in every single trade, even me, I don't use a liquidity sweep in every single trade because it's a discretionary tool. So, for example, in this trade, was there really a liquidity sweep? Not really. But could you fundamentally say that this was a sweep on liquidity? Yes. There's a range here, there's a push through it and a breakdown. It's a discretionary tool, and it's up to the trader to kind of decide how they would like to be when they utilize it, I guess. They could be more aggressive, more conservative, whatever it is. But at the end of the day, I've had so many repetitions with this plan. Someone who's backtested significantly has so many repetitions in this plan. When you have that unwavering confidence that the trades you're taking are fine and correct for the plan, it shouldn't even come into your mind that when you lose a trade with a liquidity sweep, you're upset. Or without a liquidity sweep, you're upset. If I lost this trade, I would not be any more upset than if I lost this trade here or lost this trade here. It's just fundamentally understanding that over the long term, the law of large numbers, no individual trade is a bad trade. And it's a tough thing to understand, but it is something that if it's not internalized, it will be painful in the long term, I can promise you, because it's the ability to have that unwavering trust, and that's why this is a big topic as well, one of the larger ones that we have here. It's that ability to have unwavering trust in your plan through backtesting that's going to allow you to actually be comfortable taking losses and even having those differences in analysis. I talked about it in a recent YouTube video. Let's talk about it here. So AUDJPY, I took the winner here simply because I took the overall low and the high, and that's just what I'm comfortable with and what I've backtested. If I, for whatever reason, took this trade here, which there's genuinely no concrete reason why I didn't take this low versus this one. The only thing is, at the moment, that's what I saw. This is the type of confidence that you need in the edge. If I took this and lost this trade, I would not beat myself up. I would not question why I took that low. I would understand that this is one trade out of hundreds to come. And over the long term, my journal is packed with shitty trades in here. Okay, I don't want to say packed with shitty trades, but there's a lot of trades in here that I would look at and say, man, usually I would take this high or low. Oh, well, on to the next. And man, you know, that was a little bit more aggressive than usual. On to the next. It's that confidence in the edge that's really going to propel you further. And I promise the ones that don't have that confidence, these are the ones that kind of rely on these types of categories. And it does hurt you. As a trader, you need to build these things and you need to have these outlooks. And it's something that, you know, I think accountability is one of the most difficult things. For a lot of traders, it's very easy to be accountable and say, have I backtested 100 trades and was it profitable? Yes. It's much different to be able to hold yourself accountable and say, am I really, really understanding my probabilities longer term? Or have I really backtested enough and internalized that data to truly believe in it? Those are a bit tougher things because there's no concrete or tangible yes or no. You have to really internalize it yourself and really ask yourself, are you truly looking at it from a probability standpoint? Some of these other ones, why you missed certain trades. I get this question a lot with my journal. As you guys know, last week I didn't trade. My PC was in the shop. I went on a trip in the end of May to New York City. I went even on a small trip in April and I didn't trade. I get questions of why did you miss this trade and why didn't you take this? It fundamentally comes down once again to that probability standpoint. If I take a week off, my probabilities don't change because I took a week off. Could I come back in a bad period of the edge and leave in a good period? Yes. But fundamentally speaking, if you have a 30-something% win rate, let's just say 34 for example purposes, or 33, you're going to win 1 in every 3 trades. If I take 1 trade at the start of the year and 1 trade at the end of the year, it is not enough repetitions for that probability to play out. But if I take 100 trades over the course of the year, of course, I'm going to see that probability play out quicker and better. So my tangible solution for this one is review your profitable testing data and even look at others. And then live trade in journal, of course, is going to be the other piece to that. But the reason why I say this is we go over data reviews a lot in this community. I do it every week in the webinars typically. If you review your own profitable backtesting data and see that it is truly profitable in the long term, that should give you that probability outlook, but also that more tangible, concrete evidence that I talk about, because I can look at this and just for an example, say, is a 3-trade losing streak normal? Of course it is. It happened right there. It happened right here towards the end of my testing. It happened right here again, a 3-trade losing streak. Perfectly normal. For those that don't truly internalize that and understand the probability, it's going to be very, very difficult, and you're going to be hurting when you reach those losing streaks. So really review your profitable data and others. This is why we have Andre's data. He has 1,000 trades sent in that other channel there. Even for myself, it was eye-opening because there was a lot of trades in that 1,000 trades that I was like, fuck, I would not take that. But he took it, and in the long term had a 34, 36% win rate, 58% win rate overall, including break-evens. Great data. And there was so many trades in there that I would be like, yeah, that's iffy. I don't know if I would take that. Or, there was trades in there that he missed that I would take. And it's that understanding that it's simply long-term probability. Everybody in this community at the end of the day has a profitable strategy. It's up to you to fundamentally understand that everybody here is going to trade differences and have minor details that they do and don't do. But probabilities say that over the long term, every single one of us will be profitable. It's only up to the ones who trust it that are going to see the real success from that. And the ones that don't trust it are going to really hold themselves back. So we'll talk a little bit about optimization and perfectionism here. A lot of you know I have OCD. I have perfectionist tendencies. I always have in every aspect of life. And this was a very difficult one for me to tackle as a trader, is understanding that no matter what you do, you cannot continuously optimize and continue to get better analysis. We talked about this a little bit here. You simply have to trust the edge in the profitable data that you've collected. And this is the people who, for example, they will send a data review and they will have 34% win rate, great profitable data, a great edge in long-term consistency. This is a lot of you. When I do the data reviews, a lot of you guys have great data. But then 2 weeks go by and you might come to me and say, well, hold on, JB, was this break of structure strong enough? And do you use like discount and premium, or how come this trade doesn't have a liquidity sweep, but this one does? All of these questions that start coming into play, they weren't in your mind when you tested that initial set of data. They only came into your mind because a lot more testing was done, and it creates confusion that does not need to be there. These are the minute rules I talk about, or the overthinkers in trading. These are the people who they get that first set of initial testing data, and let's call it a 30% win rate. You are profitable, and you essentially have a money printing machine in front of you, but instead of turning it on at a 30% win rate, you sit there, you leave the machine off, and you say, how can I make this a 34% win rate? And it's those people that hurt themselves because now they continue testing and trying to over optimize. And after 1,000 repetitions of trades and testing and, seeing candlesticks on a chart, you are truly hurting yourself because you're trying to optimize a minute increase in win rate. But in the process of doing so, you're cutting down repetitions to a point where your edge isn't even properly playing out due to probability anymore. So this is the example of a trader who, let's say they have 200 trades in a year in their first backtesting data with a 30% win rate. They might try to get themselves to that 34% win rate, a marginal increase. It's decent, but it's a small increase nonetheless. But in the process of doing so, they limit their trades from 200 to, for example, 70 or below. You're not giving yourself enough repetitions now for that probability to play out in the long term. And just mathematically speaking, repetitions is the most important topic over win rate when it comes to traders. And this is a much, much bigger category than you might realize. And for some of you that might find yourself in that category, once again, my solution here, please stop backtesting. Vouch for this statement. Thank you, Sugar. I agree with this statement wholeheartedly. I will say, as a community, I do feel like a lot more of the traders I've seen fall into this category than others. Rather than, I had an analogy I've used before, and it's kind of a goofy one, but it's entertaining at the end of the day. I joked that in a one-on-one call with a student that me, Andre, and Sven are engineers, and we created this machine, and it was a money printing machine. And this money printing machine, obviously being our strategy, is worth $50 an hour when you flick that on button and you let the machine run. It's just obviously arbitrary numbers here for entertainment, but $50 an hour, this machine's up and running. There is a handful of people in this community who they joined, they saw the machine, they, learned it a little bit, flipped it on and started making money. These are the people who are getting their prop firm payouts. They're funded already because they simply trusted the machine and what it can do. And then there's another group of people who sit down with that machine and they say, well, wait a minute. Instead of turning this machine on right now for $50 an hour, why don't I sit here and try to perfect it and make this the best machine possible so it can make $55 an hour? And in the process of trying to make this the best machine you possibly can, adding all these rules to your plan, adding all this backtesting, and months even go by where traders can spend 3 months trying to get their win rate from that $50 an hour to $55 an hour. And then they finally turn on the machine after 3 months and it's a marginal increase. And in some cases, some of them never even get to that $55 an hour increase. They're still stuck with that $50 an hour trading plan, but they refuse to turn it on because they just want more and better results, more optimization, more complexity, and all of these things take them months down the line when they could have just learned these fundamentals here, probability and trust in the edge in analysis, and it would allow that machine to turn right on and get working for you right away. I know most of you came into trading for money and income. No one's here to lie. I mean, some of you can say it was fulfillment or destiny, whatever you want to call it. But at the end of the day, everybody's here to make money. And to me, I think it's most important, turn that proven machine on, trust it, learn the probability, practice, but don't sit here and be the person that continues backtest. I hate to say it, but for those of you that are backtesting 100, 500, 1,000, I've seen people with 2,000 trades of data. It's good. But at the end of the day, you got to understand that backtesting isn't going to make you money. The only thing that's going to make you money is starting to leverage prop firms, starting your own personal capital, practicing on a live market. These are the things that are important to put money in your pocket at the end of the day. Don't be the person that spends 3 to 6 months only backtesting, looking for perfectionism versus just starting it up, being in a good spot already. Like I said, most of you backtest and are profitable as is, and just let it run from there. So that's my next one. And my solution for this, please stop backtesting if you are a person that feels they're in this category. I have recommended to people, I don't want to name names. I've had one-on-ones with students and they fell into this category. And I told them, do not backtest for 3 weeks. Do me a favor and only live trade in journal. And lo and behold, when I told this student this, 2 weeks later, he's sending a funded certificate in chat. It was like, not only is it super fulfilling as a mentor when I can kind of identify a problem with the student, give him a concrete solution and tell him to go for it, but when he goes for it, he achieves something that he was nervous about for literally months and months and months of backtesting. It's a great feeling, but I wanted to open some of your eyes that more and more testing is not the answer to success. It's being able to take a step back sometimes if you fall into this category, stop backtesting, focus on the live market. You're going to find yourself mentally in a lot more calmer and less confused of a state, because in backtesting, let's call it an hour a day, you could have 30 trades be thrown at you in an hour in backtesting. 30 trades in a live market could take a week and a half, 2 weeks. So understanding that that is already a big calming factor in mentally allowing you to step back and take your time is huge. But then journaling that and really seeing it become fulfilling, like I said, with a student passing a prop firm challenge by taking a break finally from testing and focusing on the live market, it's super, super fulfilling. So for those of you that fall in that category, that would be my solution for you if you feel you're in that area. If there's multiple of these that you feel you struggle with, which can be common as well, it's one of those things. Hold yourself accountable. Really ask yourself, are some of these bullet points here stuff that you find yourself having issues with? And if they are, obviously shoot a message to a coach, ask me, reach out on a solution. Because if you do fall into multiple of these, maybe the solutions can change a little bit. But the last one is lack in trust. This one is confidence and edge and lack in trust. This one is a tough one because there is some students who don't have the confidence and the edge, but they may not necessarily realize that's what's causing other issues. And there is a lot of other topics, like I would say discretion and missing winners, that kind of fall into this one as well. But number one, not enough testing. This is typically where people fall into a lack of trust category. It is the people who, there's 50-50. There's some people who really, really are ambitious and they do too much testing. There's people who honestly hate backtesting, and it's fine. It might not be for you, the repetitions, the tediousness of it. But if you don't have enough backtesting, you will not trust the plan enough to be profitable. This is the traders that unfortunately feel they can take our trading strategy. It's one of the reasons I give our strategy for free on YouTube. I can give my strategy for free on YouTube to thousands of people. There is very few who have messaged me and said, hey, I literally got profitable and funded with the strategy for free on YouTube. These are the people that took it, backtested it, and built trust in it, versus a lot of traders out there who unfortunately think they can grab a strategy, hop in a live market day one, and they're going to be profitable because the strategy works. It's just not the case. It's not how trading is. So not enough testing leads to that lack in trust. And it's one of the reasons why the people that jump around from trading plan to trading plan and system to system, they find themselves struggling for sometimes years in the live markets because they simply aren't building that trust and confidence in data because they're not backtesting enough to see it in the probability. Now, collapsing and losing streaks, this is a big one. This is the people who lose 4 trades in a row and it is the end of the world for them. I understand mentally it can be difficult being in 4 trade, 5 trade, 6 trade losing streaks. But for those of you that have enough backtesting data, which is a lot of you, most of you do, you should be able to look at your data and understand that that is plausible. There can be and will be times where you enter 5 or 6 trade losing streaks in drawdown. I know it sucks to hear. I know for you guys that are working with prop firms too, and they have this drawdown rule and stuff, it can be punishing to lose that many times in a row. But if that's something you backtested, I hate to say it, there is no trader out there that is not going to have a losing streak of 4, 5, or 6 trades, depending on management and all sorts of things like that. But with a strategy that is this heavily profitable and strong over the markets, you have to understand that there is drawdown the same way that there's these increasing streaks in an equity curve. You can look at my equity curve here. The way there's these deeper drawdown streaks, or even this period here where it was weeks where I didn't make profit. But then there's times like this where 3 winning trades in a row exploded my equity curve and insanely increased the amount of capital I had in my account. This is kind of what you have to understand as a trader, is that ebbs and flow is what it's called, versus the type of trader who really is going to let this stuff get on his mental. The issue with that is they will never find that comfortability to sit down and really trust that longer term perspective. These are the traders who 1 or 2 weeks go by and they're in la la land and euphoria because they won 2 trades recently and they're up 6% or 3% or whatever it is. And then there's other traders who 2 weeks after that, they now lose 2 trades, 3 trades in a row, and now they're in the gutter and they think something's not working, their trading plan sucks, and they must be doing something wrong. You won't be able to find that long-term comfortability, which is so, so important if you don't have enough backtesting data to support it, or if you don't internalize your backtesting data. It's one thing to test 100 trades and see it's profitable. It's another thing to sit down and really ask yourself, okay, what was my deepest drawdown streak in those trades? Let's take a look at Andre's little data that we got going on here. Course content, swing, right here. I don't know. I'd have to open the spreadsheet for it. There was a point in here where I think it was like 11, 12, maybe even 14 losing trades in a row. Andre goes into that data set understanding that, but looks at that long-term perspective we can see here. I mean, if you disregarded this snapshot or even, disregarded losing streaks, anybody can agree that this is a consistent and profitable and very clear upward trend on this strategy. We can agree that 300% gain is ridiculous with a 60% annual yield. Oh, here we go. Max consecutive loss is 12. With a 60% annual yield, that is enormous. That beats out the stock market by 6x on average per year. But he also understands that he had to endure at some point a 12-trade losing streak to achieve such ridiculously great results. That's something that a lot of people fail to internalize, and that's the people who lack that confidence in the edge. You gotta internalize that type of stuff and ask yourself, when I'm in a 12 trade drawdown period, am I going to be able to withstand that? And, mentally having that fortitude to push through it. Now, my solution here is just backtest more until the profitable data is shown. A lot of you guys already have this part down. It's the internalization of that backtesting data. And like I said, internalizing your deeper losing streaks that you saw in that data to achieve such great results. And, I talk about that here, mentally internalize it. But then I'm really looking at stuff like, how much did your account grow? What was the time span that that account grew? And kind of just what I showed here. We see a 60% gain per year, but we do see the 12 trade losing streak here. Internalizing these KPIs or ratios and really trying to bring that into a live market. That's going to build that trust in the trading plan. And to be quite honest with you, I do feel less people than I put here fall into this category. A lot of you guys are really, really good about backtesting. But for the few of you who may still find yourself struggling, I do think if you are not backtesting, keep this internal note and understand that without this concept or this trust and fundamental underlying trust in your edge, it is going to be very difficult, if not impossible, to be profitable in the long term. If you do not trust your data, if you do not trust your own trading, these are the traders who start taking certain trade scenarios and saying, is this a bad trade, or am I doing something wrong? Right here, I mentioned losing streaks end up to insecurity. I can take losses here and understand that, did I do something wrong here? Did I do something wrong here on USD CAD? No. But the people who are in a losing streak and then take a loss like this, they might start digging and they might start saying, well, hold on, what about this high? Was this the most recent range? Should I try to take this? Or was this in a discount or premium on the higher time frame? And oh, wait a minute. We just entered a demand zone on the higher time frame. That's why I lost. All of these like crazy minute details start working their way into your edge and your trading plan. And that's that insecurity showing when that losing streak does come around. And it's that lack in trust of trading plan that's being shown there. So, I hope you guys can look at this chart. Obviously, I whipped this thing together to just show you guys, a visualization while I talk through it. But I hope you guys can really look at this chart and try to internalize what I'm speaking on here. And if you find yourself in any of these categories, watch this back, hear what I say, and maybe even the solutions that I talk about, try to implement them, because I do feel most traders, 90% of them will fall into one of these categories here. And this could be the reason why you're not finding yourself profitable if it's been a while compared to others in the community. There are some in the community who join. The fastest I've seen get funded in this community is 2 weeks. And that is a trader who just fundamentally comes in. He trusts the edge. Maybe it's because the confidence in my voice and Andre and Sven's voice. Maybe he just has that underlying faith in it and he backtested a lot. He understands probabilities, and he was told by Sven, Andre, and I all the time, we tell you guys, keep your head down, focus on the long term, and that probability will play out. He trusted that. and he didn't allow himself to fall into that over optimization. He trusted the edge, the data that we have. He saw the profitability coming from Andre, Sven, and I, and he took it, implemented it, and in 2 weeks was funded and has since been climbing and scaling to different accounts. So it's that mental shift that really is needed as a trader, and it's one of the toughest things to hold yourself accountable for. But I'm hoping that some of you can kind of resonate with what I went over here and hopefully kind of take those solutions into a concrete, actionable step. But without further ado, I talked a little bit about how I will go over some data here. What time is it? It is 12:14. I think I started at 11:30. So I have a little bit of time here to go over some of what I talked about. Now, one trade, let's check out this trade that you mentioned, Haroon, if you're still here. Sorry if I'm pronouncing your name incorrectly, by the way, too. You can always let me know. But you mentioned there was a trade, you had a loser. We could go over it, and then we'll check out these trades here. So USD Chef, Pound JPY, AUD Chef. Check them out. So Pound JPY, I'm assuming, was one of these in the sequence. We had a pretty solid sequence of trades here on Pound JPY. So this first one I took, I got to capitalize on that winner. And this one right after as well was another winner. So this was when my PC was in the shop. I mentioned this in actually one of my most recent YouTube videos talking about this trade. This is a beautiful setup. 2 setups in a row for 6RR. Fantastic. So yeah, nothing stands out to me about that trade, but great job on catching that. Obviously, if this is the one you're referring to, I'm assuming so. Because I don't really see anything else. But yeah, great job for catching that trade. It's a solid winner. And then he mentioned, let's see here. He mentioned USD Chef. Take a look. Also a great trade here as well, if you're referring to this most recent winning trade. So as you can see, I had a trade here and I missed it. For my trading plan, once the next low is broken, like so, I would then go and adjust my Fibonacci tool here. I like to take this overall high. It's almost, negligible in this scenario. It doesn't really matter. My entry is going to be about the same, but another killer trade, great range there. A bit ugly with liquidity, but I like that you stuck to the plan there. I like that you just followed those overall higher highs and higher lows with the trend. Another great 3RR, so you're killing it there. And then AUD Chef, we'll take a look at. This is another great winning trade. I saw a lot of people took this one too. From the high to the overall low, tapped in. You're looking at 9RR here, so absolutely killer. That's, great job on all 3 of those trades there. It's fantastic. And Haroon, honestly, from what I see, this trade looks perfect. I'll pull it over here so everybody can look. But it kind of goes back to what I said. Having that full confidence in the edge, I see nothing wrong with this trade. I don't typically trade gold myself. But yeah, we see a sweep on liquidity here, a break of structure. We have a couple fair value gaps that are filled. If this is something that you would have taken in back testing, there's no problem with taking it in a live market. You almost got tapped in for a break even here with that reaction. So yeah, for me, there's nothing wrong with this at all. It looks like a great trade. It's just having that confidence in that edge and how you trade that's most important. But yeah, that trade looks great. And let me check here with Tomas and see if we got his live journal we can look at. Here it is. So Tomas mentioned to me, he said that he started at negative 12% of the year and slowly been kind of climbing out of that drawdown, which, is kind of expected. When you're getting used to that live market scenario, you're expected to take a good amount more losses. Him and I have actually talked and mentioned that, he found his issue was more of missing winning trades. Yeah, he said, can't complain. I'm up 15% this month. That's insane. So great job there. Yeah, I would not let yourself stress about losses. Like I said, it's probability. But yeah, 15% is insane. So keep killing it because that's great. That's great data. But yeah, me and Tomas kind of talked about he was missing winning trades at the beginning of the year a little bit here. Obviously, we're seeing that increase now. 1%, 3%, 2%, and 4% month. So profitable 4 months in a row now, which is absolutely fantastic. The data looks great here. Let me check overall. So about negative 2% gain overall. So he's working his way climbing out of that. One thing too, don't be too hard on yourself when there is, like I said, you were kind of newer to that live trading when the start of the year began here. So don't be too hard on yourself that you had a shitty 2 first months, because at the end of the day, what you want to look back on is, I typically say 3 months or 90 days. If your last 90 days are this great and you're seeing this type of improvement, you're on a fantastic track. So don't sit here and beat yourself up over this number here, because it includes these 2 months where you were kind of getting used to things and still getting your hands wet in the live markets. You know, kind of look back 3 months and say, man, I've seen some crazy improvement, profitable 3 months in a row, even 4 months in a row. I'm starting to see a lot more winning trades. Win streaks like this are great. 3 win streaks in a row, or 3 winning trades in a row. This month has been great for a lot of people. So yeah, I mean, there's nothing too much that I want to dive into here. I mean, I feel like this data looks great to me. I love the improvement that I'm seeing too. Yeah, we'll take a look at some of these winners, because I'm sure they're probably some of the same ones we just went over. Oops, sorry, I clicked on the wrong one. But yeah, that's a great trade nonetheless. Take a look at this one. Yep, so this is one of the pound JPY trades I talked about, where it's just crystal clear. Great sweep on liquidity, break a structure, tapped in super quickly to TP there. We'll look at this one. Same trade we just went over as well, AUD CAD. So we had a great sweep on liquidity, big break of structure downward. We tapped in that fair value gap. So yeah, great trades here. And then the last one, I'm assuming, yep, AUD Chef. So another good winning trade here. I know Roshan mentioned USD Chef, another winning trade. So there's been a ton of winners this last month, and you know, you're doing a great job capitalizing on those, which is most important, as I mentioned before. Even being in such a low and slow period here, like this is a tough low and slow period. But you're coming off of a 2 trade win streak, lots of low and slow data here and some negative positions, and then 3 more winners to come and sweep and wipe all of this out plus more. So that's what profitability looks like. It's not always sunshine and rainbows. So I think that you locked in and, you know, trusted the edge enough to continue trading and got to capitalize on 3 great winning trades is amazing. That's kind of what that probability mindset is really for. But yeah, this data looks great to me, man. There's nothing that stands out to me. You're killing it. You know, last 3 months you've been profitable, which is key. That's one of the main things to focus on, is seeing that profitability over time, not being too hard on yourself about that initial rougher period in the live markets. It's going to take some getting used to in practice. But yeah, I mean, this looks great, man. Now, I know you did mention questions about prop firms and haven't been doing the best with prop firms. My 2 things I would say here. Number 1, with the profitability that you're showing here and the way that you approach prop firms could be improved. I feel like taking a singular account is good, but as we've talked about before, for those traders who do split accounts, for example, buy 2 10K accounts in split trades, it mitigates the drawdown that you're seeing here among 2 accounts. And you actually, with these 3 winning trades, would have passed essentially both accounts if you just split them 1, 1, 1, 1 and kind of delegated half and half. You would have actually passed both accounts. So with obviously 2% risk and those few trades there. So I just want to point that out. So maybe that could be an option for you. And obviously I understand that's kind of dependent on the funds that you're willing to put into an evaluation account. My other advice would honestly just be, you know, don't let a failure on an account hold you back. Like, take another shot. Understand that if you spent, call it a month or more, let's just say like that account started here back in May. If you spent a whole month and a half on that one challenge account and it did kind of fail because of this losing streak towards the end here, don't be afraid to give it another shot. Like, it's what we're here for. You know, anybody's going to get knocked down. You just got to be able to get back up and kind of push through it, because what I'm seeing here is it's not irrational. If I saw someone showed me data with 50 losing trades in a row and negative months, I'd be like, all right, man, let's maybe take a step back and back test some more practice. But I think it's completely rational to hop back on that horse and try again because of the profitability we're seeing here. It's definitely not an irrational decision, and I think it would probably be your best bet. Just give it another shot. And if that's something that's kind of worrying you again, you could try different management approaches. For example, I know some people do risk 2% because they want that quick pass and fail. Yep, there we go. So I'll talk about it here. So he said, I always buy 2 accounts at a time and trade them with 2% risk on each trade. It's been working great as I'm passing phase 1s a lot, but I guess I've just been unlucky of reaching slow periods when on phase 2. It's perfectly plausible. If you're passing a lot of phase 1s but struggling with phase 2, which is the lesser of the 2 anyways, it could just have to do with that distribution of the edge. It could be something where if you pass 2 phase 1s at once and you're in 2 phase 2s, you could even lower risk if you wanted to try and, because you don't have as high of a profit target, you could try and lower risk to mitigate that overall drawdown. But honestly, I'll say it, if you're passing phase ones, you're doing the right thing in my opinion. That's the harder of the two phases. You could have just gotten unlucky distributions with phase two. But also keep in mind, don't let yourself get to the point where you pass a phase one and then phase two is kind of like, holy shit, like this is the last step and I'm almost there. And then it leads you to being more discretionary again and falling into those habits of being picky with trades and only wanting A plus setups, because there is a little bit of pressure on you there in phase two, understanding how close you are. It's that kind of mental battle between yourself that you gotta be able to hold yourself accountable and lock in there. Because it is something I've seen before where traders get into phase two and in their head, they're like, oh, this is the easier phase. I'm almost there. I'm right around the corner from funding. Let me just choose the best A plus setups and make this happen easy. And as we've talked about before, choosing and picking and choosing A plus setups doesn't show that underlying probabilistic mindset. And it actually does hurt traders more than help. Not all A plus setups are going to be winners. We kind of saw something like that with, well, actually a lot of my trades I take that I could see and be like, man, this is an A plus perfect setup, they lose. And at the end of the day, like Roshan showed us here, this USD chef trade right here, it's not the prettiest. I mean, it's a pretty ugly stop loss placement here, but at the end of the day, he trusted the edge. He trusted that, he saw the new range that formed, the fair value gap, sweeps on liquidity that are within this range or whatever it may be. He took the position, he followed that bearish trend, and it pays out. So it's one of those things where if you're picking and choosing good setups due to a little bit of pressure or that mental battle that's kind of going on, you could end up missing out on trades like this that aren't picture perfect, but they do play out fantastically. So it's kind of that give and take. I've talked about it before. Missing winning trades is 3 times as detrimental as taking losing trades. Someone who sits here and says, man, this could lose because of equal highs, but it could win because it follows the plan. Every single time you need to take that trade, because you got to understand that that could win of 3 RR is 3 times as important as that could lose. And that's why we really push that idea of repetitions. Keep trading, repetitions. The probabilities will play out quicker and better if that's the case. So, but I think you're in a great spot. I think what you're doing is correct. I think you got to keep at it. I embarrassingly enough will admit, I think I failed. I'll admit one thing, it was a different time. So, I didn't have the luxury that you guys have here. There's people here who are passing their first challenges. I think Andre and I combined probably blew 20 plus. So keep that in mind. Him and I were trading partners years and years ago when my Forex funds was a thing. And him and I together would sit on calls and man, we would blow accounts like you would not believe. But, it shows you that long-term perspective of, progress and really just mentally getting into that field of, hopping back on your horse, try again, that discipline of it. So I think you're in a great spot, man. I wouldn't stress too much about it. Thanks for the advice. Yeah, no problem. It's tough to admit that I've blown probably 9 accounts. Do you know each other even? Yeah, so Andre and I have known each other for maybe 5 years now. So yeah, I've traded with Andre a very long time, and yeah, me and him have been through firms for ages. We were with my Forex funds. We were trading very discretionary too at the time. Like it was a strategy. We've traded lower time frames. We've done scalping, all sorts of discretionary trading. And, I think the biggest thing for me was finding that comfortability over a long period of time with simplicity, especially 4-hour swing trading. From my lifestyle and my perspective, it can't be beat. I absolutely love the 4-hour time frame now. I will never go back to lower time frame. But yeah, it does show you guys, me and him got the living shit beat out of us in our early days. And it took repetitions and repetitions and repetitions. Me and him would hop on calls every day at 8 a.m. for New York session with a lower time frame strategy. And it took years for us to even get that strategy to a point of funding and payouts and profitability. And then, it's one of those things like if you see yourself being a trader or wanting to trade long term, lock yourself in, understand there's going to be losses as time goes on. And, just look at that long-term perspective. Know that you can achieve it in the long term. Keep that faith in yourself and that discipline and keep going, because that's really what it comes down to. If I lost my first 3 challenges and quit, I would not be where I am right now. And, I wouldn't have started a mentorship. I wouldn't have been able to get payouts and funding and scale into personal capital and make the money or even the returns I do now. Like, you never want to be that person that's sitting there thinking, what if I didn't quit? Like, you never quit. That's honestly the only advice I can give you. That goes for everything too, not just trading. But probably about ready to wrap it up here. What time is it? 12:28. So yeah, about right on the hour here. I hope. I don't think I went over, did I? No, yeah, just about 55 minutes here. Any questions before I wrap it up? Take a drink here too. My voice is hurt. I always lose my voice at the end of these webinars. Yeah, no problem, guys. All right. So, I see one person typing. Yeah, no problem. So, if there's no other questions, you guys know I'll have this posted probably within 10 minutes or so in the live sessions channel so you can watch it back. I definitely recommend, if you fell into one of those categories we talked about, feel free to watch it back as well, and kind of look at the solutions I talked about. Maybe even watch it back to identify if you fall into one of those categories too. But yeah, no problem, guys. Thank you guys all for tuning in. It was a pretty good webinar today, honestly. I enjoyed it. So, and I'll see you guys next week. Enjoy the weekend too. Bye.